Tesla's shocking collapse, and no one saw it coming. This fast in just 90 days, Tesla has gone from being the undisputed leader in electric vehicles to facing one of the biggest crises in its history. Elon Musk's EV empire is crumbling, and fast. The company's stock has tanked by more than 53%, wiping out hundreds of billions in market value. At the same time, Tesla's European sales have nosedived by a jaw-dropping 70%, setting off alarm bells within the company and across Wall Street. This wasn't just bad luck or a market shift, it was retaliation, Europe's response to Donald Trump's hardline trade tariffs that strained international relations. And Tesla, unfortunately, became the first American titan to take the hit. What started as a trade war has morphed into Tesla's worst nightmare. So, what happened? How did things unravel so quickly? Let's break it down. The collapse of European sales Europe was once Tesla's golden market. From 2018 through 2022, Tesla reigned supreme in places like Germany, France, and the Netherlands. Customers loved the sleek designs, cutting-edge tech, and of course, the magnetic personality of Elon Musk. But in Q1 of 2025, everything changed. Between January and March, Tesla's European sales completely fell off a cliff. According to Eurostat and national vehicle registration data, Tesla's vehicle deliveries across the EU dropped by over 70% compared to the same time last year. In Germany alone, previously Tesla's largest European stronghold, sales plunged 73%. France saw a 66% drop. Italy, over 70%. This wasn't a slow decline, it was an overnight rejection. What caused this dramatic fall? A mix of rising prices due to US tariffs, Elon Musk's controversial political commentary, and growing resentment toward American economic policies. Surveys by European AutoWatch showed that more than 60% of former Tesla buyers cited negative brand image and loss of trust as reasons for walking away. While Tesla stumbled, competitors pounced. European automakers like Volkswagen, Renault, and Peugeot slashed EV prices and ramped up production. Chinese brands like BYD and NIO also stormed in with affordable alternatives, free from political baggage. By March, Tesla's share of the European EV market dropped below 5%, its lowest point in over 6 years. The company that once set the standard was now an outsider in a market it helped create. But the damage didn't stop there. What started on the showroom floor soon rippled through Wall Street. Tesla's stock crash, a financial firestorm. The collapse in European sales was just the spark. What followed was a full-blown market meltdown. By the end of March 2025, Tesla's stock had plummeted 53% from its January highs. Investors watched in disbelief as over $400 billion in market value vanished almost overnight. On January 1st, Tesla's market cap was around $770 billion. By March 31st, it had dropped to just over $360 billion. This wasn't a typical market correction. It was a brutal crash that erased years of growth. Several factors triggered the sell-off. The European sales crash shattered investor confidence in Tesla's future growth. Trump's trade tariffs drove up costs for raw materials and manufacturing, threatening profit margins. And perhaps most damaging, Elon Musk's controversial political statements and frequent social media outbursts began alienating both investors and customers. Institutional investors started pulling out. Hedge funds dumped millions of shares. Tesla's bonds were downgraded by 2 major credit agencies. Analysts slashed their forecasts, with many saying Tesla's golden era was likely over. By late March, margin calls and algorithmic trading piled onto the chaos, accelerating the collapse. Everyday investors, many of whom saw Tesla as a once-in-a-lifetime growth opportunity, saw their portfolios gutted. A company once hailed as unstoppable was now in freefall. And the person at the center of it all? Elon Musk wasn't exactly helping. The Musk effect, adding fuel to the fire. While Tesla was falling apart, Musk's behavior only made things worse. Throughout January, February, and March 2025, instead of calming fears, he stirred the pot. Whether it was polarizing political tweets, erratic interviews, or combative responses to critics, Musk's public persona became a liability. Investors began to question not only Tesla's numbers, but its leadership. And when the captain appears to be steering into the storm rather than out of it, panic spreads fast. So, is this the end of Tesla's rise? It's too early to say if this is the final chapter of Tesla's success story. But what's clear is that the company is facing a crisis unlike anything in its history. With sales crashing, investors fleeing, and public trust eroding, Tesla is at a crossroads. The question now isn't just whether Tesla can bounce back, but whether Elon Musk can regain the confidence of customers, investors, and the global market. Stay tuned, because this story is far from over. And if you're still with us, don't forget to hit like and subscribe. You won't want to miss what comes next. How Elon Musk's behavior helped spark Tesla's European collapse. One of the key drivers behind Tesla's rapid fall in Europe wasn't just market forces. It was Elon Musk himself. His political stances and public behavior played a major role in turning Tesla's once loyal customer base against the brand. It started when Musk publicly supported former President Donald Trump's newly imposed tariffs against the European Union and China. On several occasions, he took to social media to defend the move, calling the tariffs essential for protecting American innovation. But in Europe, where Trump's policies were already widely unpopular, Musk's comments didn't sit well. Things quickly got worse. Musk made several inflammatory remarks about European leaders, labeling them bureaucratic parasites and anti-innovation relics. In an interview with an American news outlet, he even accused European environmental regulations of being designed to punish Tesla. These remarks set off a media firestorm. European outlets painted Musk as arrogant and out of touch. Public backlash followed fast. In Germany, protesters gathered outside Tesla's Giga Berlin factory, accusing the company of exploiting workers while disrespecting European values. In France, consumer advocacy groups called for a nationwide boycott of Tesla vehicles, while influencers urged people to buy European instead. This wasn't just a PR problem in Europe. Back in the US, concern was growing at the highest levels of government. The government steps in. On March 25th, the US Commerce Secretary issued a stunning statement at a press conference. "We are concerned about the risks Tesla's leadership poses to American investors and to our broader economic stability." The secretary specifically cited Musk's erratic political behavior, collapsing European sales, and Tesla's exposure to retaliatory tariffs as serious red flags. This was unprecedented. It marked the first time in modern history that a senior US official publicly questioned the financial health of one of America's most iconic companies. And the markets reacted instantly. Tesla stock dropped another 6% within hours. Big investors ramped up their sell-offs, and analysts slashed their expectations yet again. The message was clear. Tesla was no longer seen as a reliable symbol of American innovation. It was now considered a growing liability. And that raised deeper questions about the company's future. If the US government no longer had confidence in Tesla, what would that mean for future partnerships, regulatory approvals, or its standing in global markets? But even that was just the beginning. Behind the scenes, a much bigger economic battle was already unfolding. The tariff that lit the fuse. It all kicked off on January 3rd, 2025, when President Donald Trump signed a sweeping executive order. Under the banner of protecting American manufacturing, the administration imposed major new tariffs on imported goods from the European Union, China, and Canada. Trump claimed the move was essential for safeguarding American jobs and industries. But for Tesla, it was a devastating blow. The tariffs directly hit the electric vehicle sector, raising the cost of everything from lithium batteries and cobalt to nickel and steel, materials that Tesla depends on. In some cases, tariffs on certain vehicle parts reached 25%. For fully assembled vehicles, they climbed as high as 35%. While European automakers certainly felt the sting, no American company was more exposed than Tesla. The brand had built its supply chain across Europe and Asia to maintain its aggressive growth, And suddenly, that entire strategy was in jeopardy. At the executive order signing, Trump delivered a fiery speech about standing up to foreign exploitation. But in reality, Tesla was the one caught in the middle. Its business model, already operating on thin margins, was now squeezed from all sides. With procurement costs soaring, Tesla had two options: absorb the losses or raise vehicle prices, neither of which was sustainable in an increasingly competitive EV market. Asia joins the fight. The next blow came from Asia. China and South Korea, two major Tesla markets and manufacturing partners, swiftly retaliated. China moved first. Already wary of the renewed trade war and Musk's public support for Trump, Beijing slapped new tariffs on American electric vehicles and parts. These ranged from 15% to 30%, hitting Tesla's exports hard. But the response wasn't just about tariffs. Chinese regulators launched new environmental audits and labor inspections at Tesla's Shanghai Gigafactory. These routine checks slowed down production and raised operating costs. Chinese state-run media outlets began publishing critical reports questioning Tesla's data privacy practices and the reliability of its vehicles. Social media campaigns promoted local EV brands like BYD and NIO, urging consumers to choose domestic options. Government-backed fleet contracts, once within Tesla's reach, started going to Chinese competitors instead. Musk's political alignment and controversial remarks had made Tesla an easy target, not just in Europe, but now in Asia too. The global EV giant on the brink. As European consumers walked away, American officials voiced concern, and Asian markets turned hostile. Tesla found itself in a perfect storm. Musk's outspoken views, paired with intensifying global trade tensions, had turned Tesla from a celebrated disruptor into a global lightning rod. The once unquestioned dominance of Tesla in the EV world was now under serious threat, politically, financially, and reputationally. And while Tesla's fall happened fast, the ripple effects across the electric vehicle industry, the stock market, and international trade are only just beginning. South Korea joins the backlash. Not long after China made its move, South Korea followed suit. The government in Seoul imposed new tariffs on American car imports, including electric vehicles. But they didn't stop there. South Korea also rolled out tougher safety inspections and stricter battery certification rules, clearly aimed at making life harder for Tesla. The impact was massive. Together, China and South Korea made up a significant share of Tesla's global sales and manufacturing operations. As trade tensions escalated, Tesla found itself increasingly shut out of two of its most important markets. Consumer sentiment soured quickly, and the brand's popularity began to nosedive across Asia. While Tesla was busy fighting battles overseas, dealing with falling sales and rising costs, an even bigger challenge was brewing at home. One that threatened the very foundation of its global business model. The manufacturing trap. By mid-2025, the real fallout from the trade war hit Tesla, where it hurt the most: manufacturing. The company had built its entire strategy around an interconnected global supply chain, sourcing lithium from Australia, cobalt from the Congo, nickel from Indonesia, chips from Taiwan and South Korea, batteries from China, and assembling cars in Germany and the US. This complex global network made Tesla efficient and competitive. But Trump's tariffs blew that network apart. Suddenly, nearly every component needed to build a Tesla became more expensive. Steel and aluminum costs spiked because of Canadian and Chinese tariffs. Battery production costs surged due to new levies on imported materials. Semiconductor shipments faced delays as South Korean customs tightened inspections. All these disruptions created massive delays and added costs. Tesla tried to shift more production back to the US, but it backfired. American factories were already running close to full capacity and couldn't keep up with the lost output from Europe and Asia. Plus, higher labor, material, and compliance costs in the US wiped out any cost advantage. By the end of Q2 2025, Tesla's supply chain was in crisis. The dream of a smooth, globally integrated EV powerhouse had collapsed under the weight of geopolitical tension. The same trade policies meant to protect American businesses had left one of its most iconic brands reeling. But the problems weren't just economic. A cultural and political firestorm was growing, and it was about to erupt. The protest wave. By spring 2025, the backlash against Tesla had spilled into the streets. What started as frustration on social media transformed into real-world protests. Demonstrators gathered outside Tesla showrooms, factories, and delivery centers across Europe and the US. In cities like Berlin, Paris, and Madrid, crowds held signs reading, "No more Musk madness," and "Stop selling our jobs." Protesters accused Tesla of enabling a new wave of economic nationalism, fueled by Trump's tariffs and Musk's divisive political rhetoric. In the US, the anger hit even closer to home. Union workers and Tesla employees staged walkouts, frustrated over stagnant wages and the company's silence on how tariffs were hurting the workforce. In Nevada and Texas, local protests flared near Tesla plants, echoing similar concerns. Environmental groups and consumer advocates also joined the chorus, calling out everything from Tesla's union-busting practices to regulatory violations. What once was seen as a company at the forefront of ethical, clean innovation now appeared to many as a political tool, compromised by its leadership. The message was loud and clear. The public's patience had run out. Tesla, once a symbol of the future, had become a flashpoint for everything wrong with corporate overreach and political interference. The reputation collapse. As protests grew, the media quickly caught up. Tesla, once the golden child of tech and green energy journalism, saw its image crumble in real time. Publications that had once celebrated every Model S upgrade or software innovation now led with stories about the company's unraveling. Headlines shifted from triumph to tragedy. The fall of an icon. Tesla's toxic brand. Musk's meltdown. Commentators across the board began questioning Elon Musk's focus, criticizing him for spending more time engaging in political fights and online feuds than running the company. The narrative took a dark turn, from innovation leader to liability. Major news outlets covered the protests outside Tesla facilities, while analysts tied the unrest to broader frustrations with corporate power, economic instability, and the perceived betrayal of public trust. The bigger picture. The story of Tesla's downfall in early 2025 wasn't just about tariffs or supply chain issues. It became a story of overreach, of how political missteps, poor leadership, and global retaliation brought one of the world's most admired companies to the brink. What started as a battle over trade had transformed into a crisis of public trust, government scrutiny, and shattered reputation. And for Elon Musk, the consequences of his choices, both business and political, were no longer abstract. They were hitting Tesla where it hurt the most: sales, stock price, and global standing. And as all of this unfolded, the biggest question still remained. Can Tesla bounce back? Or is this the beginning of the end? Industry watchdogs and analysts turn against Tesla. As the controversy surrounding Tesla intensified, industry analysts and consumer watchdogs joined the growing criticism. Reports began to surface detailing an increase in safety complaints, quality control issues, and declining customer service. Tesla, once admired for its innovation and futuristic design, now found its image tarnished by accusations of corporate greed, political recklessness, and falling product standards. Media coverage shifted dramatically. Once a tech darling, Tesla was now being portrayed as a corporate villain. But the real danger wasn't just bad press. It was the shift in consumer behavior. Why buyers switched to Volkswagen and Hyundai Tesla's reputation crisis soon showed up in the numbers. By the first half of 2025, sales in Europe and North America were sharply down. Longtime customers canceled pre-orders. Showroom visits dropped. Even Tesla's famously successful referral program ground to a halt. Competitors quickly moved in to capitalize on the chaos. Brands like Volkswagen, Hyundai, Renault, and Kia launched aggressive marketing campaigns targeting disillusioned Tesla customers. European automakers promoted their focus on sustainability, stable leadership, and affordable prices. Korean manufacturers emphasized their strong warranties, dependable service networks, and expanding domestic production. The shift was most noticeable in Germany, France, and parts of the US Midwest. In these regions, Tesla's market share plummeted, dropping by nearly 70% compared to the previous year. Models like the Volkswagen ID.4, Hyundai Ioniq 5, and Kia EV6 gained traction as buyers moved toward brands that felt more grounded and less politically controversial. Independent surveys confirmed this trend. Former Tesla customers cited three main reasons for jumping ship: political controversy, declining product quality, and the company's disregard for public opinion. Even Tesla's last-ditch efforts, steep discounts and promotional deals, failed to slow the customer exodus. And this wasn't just a temporary dip. It pointed to a deeper, longer-term breakdown of Tesla's once loyal customer base. While buyers turned away, a parallel crisis was erupting inside the company itself. Internal chaos at Tesla. Behind the headlines and public protests, unrest was brewing within Tesla's own walls. From assembly lines to corporate offices, employees were questioning whether they could continue working under Elon Musk's leadership. Signs of internal dysfunction were everywhere. In Nevada and Texas, labor organizers reported a surge in union activity at Tesla factories. Workers complained about unsafe conditions, mounting pressure to increase output, and stagnating wages, problems made worse by the company's financial downturn. In Europe, Tesla's Gigafactory Berlin became a flashpoint for worker unrest. Employees staged walkouts over broken promises, unfair treatment, and fears about the company's future. Even at Tesla's Palo Alto headquarters, cracks were showing. Several top engineers and executives resigned or publicly criticized Musk's leadership. Whistleblower reports painted a grim picture of the internal culture: favoritism, dysfunction, and a growing lack of direction. But the deeper issue wasn't just the financial mess or media scrutiny. It was a profound sense of betrayal. Many employees had joined Tesla to be part of something bigger, a mission to transform the world. Now, they felt they were part of a company spiraling off course. By summer 2025, Tesla wasn't just dealing with a falling stock price and a fleeing customer base. It was facing open rebellion from within. And while Tesla battled internal and external crises, Wall Street was preparing to deliver one of the most damaging blows yet. The Wall Street meltdown. Tesla's collapse in Europe triggered shockwaves across the financial world. What started as a regional crisis quickly evolved into a major Wall Street sell-off. Once the favorite of institutional investors and hedge funds, Tesla began to see its biggest backers flee. The sell-off started quietly, but accelerated rapidly after early 2025 sales data showed steep declines in core markets like Germany and France. Major investment banks, including Morgan Stanley and the Royal Bank of Canada, downgraded Tesla's stock. They cited not only the company's declining sales, but also the political volatility surrounding Elon Musk and the business. Things got worse when the US Commerce Secretary issued a rare warning, describing Tesla stock as too risky for investors. That statement sent a clear signal, and the market responded. Pension funds, mutual funds, and even sovereign wealth funds began dumping Tesla shares. Billions of dollars were wiped off Tesla's valuation in just weeks. By mid-March 2025, the company had lost over 50% of its market capitalization, more than $300 billion in shareholder value gone. What was once one of the most celebrated stocks on Wall Street had become a cautionary tale. Wall Street walks away. This wasn't just about short-term dips in sales. It marked a strategic shift away from a company whose future looked increasingly uncertain. Elon Musk's polarizing behavior, the growing political backlash in Europe, and the financial hit from Donald Trump's aggressive tariffs combined to shake investor confidence to its core. Analysts who once praised Tesla's dominance were now raising red flags. They pointed to a damaged brand, a disrupted global supply chain, and shrinking profit margins. For the first time in years, major investors were seriously asking whether Tesla could continue to lead the electric vehicle revolution. This wasn't a panic-driven reaction. It was a calculated pullback. Hedge funds adjusted their portfolios. Pension funds moved capital into more stable, less risky assets. And behind closed doors, Wall Street insiders were quietly suggesting what once seemed unthinkable. Tesla's golden era might be coming to an end. But Wall Street's retreat was just the beginning. As big money pulled out, the global electric vehicle market began to shift, and Tesla was rapidly losing its grip. The global EV shake-up Tesla's crisis is just one part of a much bigger story. A global realignment of the electric vehicle industry. The combination of Trump's protectionist trade policies, Europe's retaliation, and Musk's political controversies sparked a major transformation. And this time, Tesla is no longer at the center of it. While Tesla stumbled, its competitors saw an opening. Chinese automakers like BYD and NIO ramped up their push into Europe, where anti-American sentiment was growing. Their vehicles were affordable, high quality, and politically neutral, exactly what many European consumers wanted. European car makers tightened their hold on the market too. Brands like Volkswagen, Renault, and Stellantis took advantage of new tax incentives and government support for domestic production. They rolled out EV models tailored to European tastes and regulations, all while Tesla struggled with factory slowdowns, higher production costs, and declining demand. This shift wasn't limited to Europe. In Asia, countries like China and South Korea imposed new tariffs on American-made EVs, directly hurting Tesla's margins. Canada introduced its own import restrictions. Emerging markets began favoring regional brands over foreign ones. By the end of Q2 2025, Tesla's global market share had dropped to its lowest level since 2016. What had once been the world's most promising EV company was now fighting just to stay relevant. The big question: is Tesla's golden age over? As the dust settles on one of the most turbulent years in Tesla's history, there's one big question on everyone's mind. Is this the end of Tesla's dominance in the electric vehicle space? The numbers paint a bleak picture. Global sales are down more than 50% for the year. The company has lost over $300 billion in market value. Its once critical European market has collapsed. Major investors have walked away, and international trade policies have shifted in favor of Tesla's rivals. Can Tesla make a comeback? It's possible, but it won't be easy. A few key things would need to happen. Elon Musk would have to repair damaged relationships with foreign governments and win back public trust. Tesla's production model would need to adapt to a world where geopolitics and protectionism rule. Innovation must become the centerpiece again, with bold new products that can reignite excitement in the market. But even if Tesla manages all of that, some damage may be permanent. Customers have already moved on. Investors have found safer bets. And Tesla's ability to shape the future of electric vehicles is now in serious question. If you're still here, you know this story goes far beyond just one company. It's about how quickly things can fall apart when politics, global markets, and corporate power collide. So what do you think? Can Tesla bounce back from this? Or is this truly the end of its golden age? Drop your thoughts in the comments below. And if you want to stay ahead of the next big shift in global business, hit that like button and subscribe. There's more coming.